This is Matthew Cratter from Trader University, and today I want to talk about why I believe that Bitcoin is going to $288,000 per Bitcoin. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So this is a kind of a crazy claim. Bitcoin's currently at about 9,000, 9,200, and to say that it's going to go to 288,000 over the next couple years, sometime within the next 2 to 4 years, sounds really crazy, but I'm going to show you the analysis behind it. And we're going to be able to use some new data points that Plan B on Twitter has provided in terms of how the US housing market is currently valued and how that fits into this regression equation. So it turns out that people store their wealth in scarce assets, in scarce assets that also don't degrade, they don't rust, they don't rot. So for example, you can't store your wealth in rare fruit because it will just rot. The way we measure scarce assets is using this measurement called stock to flow. And the higher the stock to flow, the higher the scarcity, the more scarce an asset is, the higher the market cap of that scarce asset. So this is basically the framework. Now, stock to flow, this can make a lot more sense as we delve into it, so bear with me here. But stock to flow is just the existing inventory of whatever that asset is divided by the new annual production. So for example, we know that gold has a stock to flow of about 58. What we do, the way we arrive at this, we just take all the gold that's above the ground in people's vaults, etc., divided by the annual production of gold mines. And a stock to flow of 58 really tells us that at current mining levels, it would take 58 years to replace all the above ground gold. So gold is a very scarce asset. Now silver has a little lower stock to flow. Silver has a stock to flow of about 33. As we said, gold is about 58. And as we're going to see, I'm going to link to this new paper, the US housing stock to flow. So you can look at the total inventory of US housing and you can divide it by new housing production. And I'll link to the paper so you can look at all the numbers yourself and make sure it makes sense. US housing stock to flow is about 83 to 95. In other words, at current production rates, it would take somewhere between 80 and 95 years to replace all the current production. Now, if you've lived in a place like New York City or Los Angeles or the Bay Area or any of these high-end housing markets, you know that people store their wealth in their housing. It's a good way of hedging. It's a way of hedging against future price increases or future rent increases. But housing has a certain amount of scarcity, especially housing that is constrained, where the supply is constrained, whether due to environmental concerns or regulations, etc. So it turns out we can plot all of these. Let me just find the chart. We can plot all of these assets on a chart. This is a logarithmic chart. We have the market cap on the left, and then we have the stock to flow on the x-axis. So market cap on the y-axis, stock to flow on the x-axis. So we'll start with a couple data points. Right here we have silver. Silver, as we said, has a stock to flow of about 33. And as a result, it has a market cap of roughly, what did we say, 561 billion. Gold, stock to flow 58, market cap of 10 trillion. So this is silver right here, this dot right here. This is gold. And then these dots down here are basically Bitcoin in its previous incarnations when it was trading at different stock to flows. And as the stock to flow of Bitcoin has gone up, the value, the market cap of Bitcoin has gone up. Now it's very interesting that all of these occur on a single line, on a regression line. And you can see here, there's the formula for it here, has a very high R squared close to above 99, which is usually pretty hard to find. And it turns out that if you look at housing in the US, so if we go back here and the US housing stock to flow, as we said, is somewhere between 80 and 95. All the value of all the current houses in the US is about 34 trillion. And so there are two different ways of plotting it. You can calculate it based on price-based or square footage. And I'll link to the article so you can dig into this. But basically, these are the two dots right here, the green dot and the blue dot. And surprisingly or not surprisingly, they are on the same line as silver, as gold, and as Bitcoin in its various incarnations. So this is sort of a mathematical demonstration of what we were saying in our first slide, that the more scarce an asset is as measured by stock to flow, the higher the stock to flow, the higher the market cap of that asset. Now, what's going to happen, or what is currently happening, we've had a halving in Bitcoin, and the stock to flow has recently moved up. And so the stock to flow over the next 4 years, from 2020 to 2024, is going to be about 56. This is the measurement of all the existing Bitcoin in existence divided by the new production. And because of the halving, there are fewer new Bitcoin being produced every day. And so if we look at this, we can see that Bitcoin has a stock to flow that's roughly between, it's a stock to flow of 56, so it's somewhere between silver, which is 33, and gold, which is 58. And this is for the current 4 years. From 2024 until 2028, this is going to double again, and Bitcoin will have a stock to flow of something like 112, somewhere between 100 and 112. There's never been an asset that has that quite that high of a stock to flow. But what this analysis suggests is that Bitcoin should have a market cap somewhere between silver's, which is its market cap is, these numbers might be roughly off for silver and gold. I think the numbers are higher now. Gold is maybe closer to 11 trillion. But either way, Bitcoin with a stock to flow of 56 should have a market cap somewhere between gold with a stock to flow of 58 and silver with a stock to flow of 33. So the market cap of Bitcoin should be somewhere between 561 billion and 10 or 11 trillion. Now, if we look at where it appears on this cross asset model line, that gives us a value of Bitcoin for the whole market cap, so all the Bitcoins, times the price of Bitcoin of 5.5 trillion, roughly equal to about half the value of gold. Now, the exciting thing about this is it puts Bitcoin, if you take a 5.5 trillion market cap, divide by the number of coins that are going to be in existence over this period, somewhere between 19 and 19.5 million, I believe it is, over this period, you come up with a figure of $288,000 per Bitcoin. Now, this is a model that has worked quite well. These data points here and here, these are different versions of Bitcoin from various points in time. And Plan B has a nice way of thinking about them, where the first cluster was really proof of concept, then we moved into payments, e-gold, financial asset. And so currently the market cap of Bitcoin is roughly 170 billion. So it's quite small. It's roughly the size of a McDonald's or a Coke in terms of market cap. But what this is projecting is that the market cap should move up quite a bit now that Bitcoin has a much higher stock to flow. This can happen gradually over the coming months, or it could happen by a very sudden adjustment. Right now, Bitcoin's been trading in a very tight range, very low volatility, and it's still in a bull trend. The blue line is over the red line, the 50-day moving average over the 200-day moving average. What could happen here, simply because this is so scarce and it's so liquid and there are no limits to how it trades, I would not be surprised to see a sudden mispricing or a breakout from this low volatility to high volatility. So what could happen? We could wake up one morning and Bitcoin is at 15,000 or 25,000 or 30,000. This is extremely possible given that it's such a small market, it has such a small market cap, especially if we learn that there's been some sovereign government, or let's say we learn that Russia or China has been accumulating Bitcoin. There are lots of things that could drive this. But the important point is that this model has worked extremely well in the past. And it's what's surprising is that even things like U.S. housing appear on the same line. And this suggests that Bitcoin has a very, very good chance of going much, much higher. Now, the objection I always hear when I make these kind of arguments is, well, silver and gold have real value. Obviously, houses have real value. You can buy a house, you can live in it, you can rent it out and get the cash flow. But Bitcoin doesn't have any industrial uses. It doesn't have any real world value. And this is where I think that people really underestimate Bitcoin. I think the fundamental value of Bitcoin, or its fundamental function, is as a store of value. And people underestimate how important this is. If you think about it, you work really hard, you accumulate savings, and if you're frugal and if you're financially conservative, you stick these in a savings account, or you stick them in a CD or something like that. Right now, interest rates are very, very low. The Fed is printing a lot of new money, and basically, which is sort of monetary inflation. It's a form of a hidden tax on your wealth. And what this means is that the purchasing power of your savings, of your sort of crystallized wealth, the fruits of your labor, is being devalued. So when I was a kid, McDonald's, you could get a Big Mac for something like 50 cents, and now it's closer to $5. And what this means is that over time, fiat currencies like the US dollar or the euro or the yen, they lose purchasing power. And especially when there's a lot of new dollars being printed, as there is now, they lose purchasing power. And so this is the reason that people like high stock to flow assets. You can store your wealth in gold, you can store your wealth in silver, you can store your wealth in housing. The two bad places to store your wealth are in bonds when rates are very low, or in cash when interest rates are very low and the Fed is printing new money. So Bitcoin is a store of value. It's unconfiscatable. The government can't take it from you. And it's a way of really passing on the fruits of your labor to your future self or to your descendants. Now, I made a video like this a couple days ago, and someone compared storing your wealth to being like Smaug the dragon in Lord of the Rings or in The Hobbit, and basically implying that this was just a wealthy person's problem. And it certainly is a wealthy person's problem, but I would suggest that it's really everyone's problem if you would like to stop working at some point in your life, and that there's nothing evil about storing up wealth. In fact, it's a very smart thing to do. If a pandemic hits, then you have a little cushion of money and you don't have to panic. And it's also a way for people to retire. And so there's a constant battle that people fight where they try to save money, but the Fed and other central banks devalue the purchasing power of their money. And so Bitcoin is a way of storing the fruits of your labor, of storing your wealth, whatever levels it's at. It's a hedge against Fed money printing. And I would suggest it also is very useful as a medium of exchange and as a way of storing wealth, especially in emerging markets, in countries with less stable currencies. This is a great tweet from Kevin Rook about how Bitcoin usage is really surging in Africa. The absolute numbers are still small, but hitting new all-time highs in Nigeria and South Africa, in Kenya, and in a couple other countries. Obviously, it's Bitcoin is being used a lot in Venezuela as well. Here's an example of an El Salvador village that's adopted Bitcoin as money. U.S. dollars typically functioned as sort of the stable currency in countries like this with unstable currencies, but Bitcoin is increasingly taking over this function, and it's becoming a medium of exchange and a store of value for people in economies with central banks and governments that are even more reckless than the Federal Reserve or the U.S. government. Obviously, Bitcoin is used to move money across borders. A lot of Chinese people using it to move their wealth out of China. This always brings up the issue that Bitcoin can be used for drug laundering, for terrorism, etc. And my response always is, well, the U.S. dollar is actually the primary currency right now for drug dealers, for drug smugglers, and for terrorists. And so it's not really a critique of a currency that some people use it for bad things. In my experience, Bitcoiners tend to be fairly conservative family people, not really driven to use it, not really using it to move drugs across borders. So these would be the functions of Bitcoin and the way that it functions. It's much easier to move across borders or to hide than gold or silver. Obviously, if you need to leave the country, as happened during the Bolshevik Revolution or Nazi Germany or Maoist China, it's very difficult to liquidate your house and move it, take it with you, take the wealth with you. Bitcoin, very easy to move it and to prevent it from being confiscated by sovereign governments. I'll also link to this article about how Bitcoin is obviously skyrocketing in places like Venezuela, Zimbabwe, Lebanon, where they've had a huge currency devaluation. Now, very smart people, hedge fund managers, people like Paul Tudor Jones have been buying Bitcoin. I'll link to this article as well. And so I just want to give you guys a heads up that Bitcoin has this potential. And there's nothing that says this model has to hold true. But it's a very interesting model. It seems almost impossible for this to be a coincidence that silver and gold and housing all appear on the same curve, as well as the history of Bitcoin. And so I would expect, and this is why I'm expecting Bitcoin to go up quite a bit over the next 6 to 18 months and easily get over 100,000, but probably get somewhere in the neighborhood of $288,000 in the next 4 years, sometime before 2024, and probably in the next 12 to 18 months instead. Let me know your questions or comments in the comment section below, and please hit that subscribe and like button if you found this video helpful. Thanks a lot for listening, and I'll see you in the next video.